Good morning. I am Malik. Welcome to the War Room. Today is Wednesday, February 25th. If you are listening to this, you survived one of the most volatile 48-hour windows in the history of the Pakistan Stock Exchange. On Monday, we lost 5,400 points. Yesterday, Tuesday, the bleeding continued. The KSE-100 index shed another 1,433 points, closing at 166,260. That is nearly 7,000 points wiped off the board in just 2 sessions. But the closing number is a lie. It does not tell you how close we came to total system failure. At exactly 11:30 a.m. yesterday, the market fell through the trapdoor. The psychological floor of 165,000 shattered and we nosedived to an intraday low of 163,900. For 20 minutes, there were no buyers, only pure, unadulterated panic. We saw 688 million shares dumped onto the main board. What you witnessed at 163,900 was a margin call flush. Brokers were forced liquidating leveraged retail accounts. Once the weak hands were wiped out, the smart money stepped back in, buying the extreme discounts and dragging the index back above 166,000 before the closing bell. But make no mistake, the institutions are not buying for a bull run. They are buying to brace for impact, because today the IMF has arrived. Let's talk about the macro. Today, Wednesday, the International Monetary Fund Review Mission officially sits down in Islamabad. The stakes have never been higher. On paper, our economy looks stable. Inflation is down and the current account is in a surplus. But the IMF is not here to hand out gold stars. They are here to investigate the Federal Board of Revenue. The FBR has missed its tax collection target by over 300 billion rupees, and the IMF wants to know exactly how the government plans to plug that hole. The market is entirely paralyzed by one phrase, Super Tax 2.0. The street believes the government will be forced to slap emergency taxes on the highest earning sectors, specifically banking and cement, to satisfy the IMF. This terror is completely visible in the charts. Look at what happened yesterday to the strongest companies in the country. Meezan Bank fell to 461 rupees. Lucky Cement was hammered down to 422. Maple Leaf Cement crashed to 96 rupees. The Islamic index, the KMI 30, dropped by a massive 1,484 points yesterday. When Sharia-compliant, fundamentally flawless companies like Lucky and Meezan are being liquidated, you know you are no longer trading fundamentals, you are trading fear. The market will not breathe until the Finance Ministry issues a statement regarding the IMF's tax demands. If the IMF wasn't enough, we are fighting a massive fire on the global front. The geopolitical risk premium is choking the life out of our energy sector. The escalating tensions between the United States and Iran are keeping Brent crude highly volatile. Simultaneously, we are dealing with intense flare-ups on our own western borders. Foreign portfolio investors despise two-front geopolitical risks. When the drums of war beat, foreign fronts pull their money out of emerging markets and park it in gold and US treasuries. This is why our energy giants failed to defend the index yesterday. Pakistan Petroleum, PPL, bled down to 222 rupees. Oil and Gas Development Company, OGDC, dropped to 286 rupees. Hub Power Company, HUBC, closed weekly at 211. These companies are cash printing machines. They are offering double-digit dividend deals. But in a global risk-off environment, dividends do not matter, liquidity matters, and institutions are using these highly liquid stocks as ATMs to raise cash. Despite the chaos, the corporate calendar marches on. Today, Wednesday, February 25th, we have a slate of critical board meetings that will inject severe volatility into individual sectors. Keep your screens ready for these exact times. 10:45 a.m. Airlink Communication. Airlink closed yesterday at 159 rupees. The technology sector has been absolutely cash this week. If Airlink announces strong quarterly numbers or a surprise payout, it could trigger a much-needed relief rally for the tech board. 12 p.m. National Foods. National Foods closed at 389 rupees. Food and consumer goods are considered defensive plays during an IMF panic. Watch their margins. If inflation cooling has helped their bottom line, this is a safe haven. 2:30 p.m. Bestway Cement. This is the heavyweight meeting of the afternoon. Bestway closed at 474 rupees. With the entire cement sector bleeding from super tax fears, Bestway's forward guidance and dividend policy this afternoon will either save the sector or send it into a deeper tailspin. 3 p.m. Nishat Chunian. Closing at 39 rupees. A pure play on the textile sector. We need to see how they are navigating the rising energy tariffs. Here is your battle plan for Wednesday. 1. The 163,900 floor. Yesterday's intraday low of 163,900 is the new absolute line in the sand. Write that number on a post-it note and stick it to your monitor. If the index trades below that level for more than 15 minutes today, it means the margin calls have you started. If that happens, go to 100% cash. 2. Trade the news, not the chart. Technical analysis does not work when the IMF is in town. A single headline out of Islamabad regarding the super tax will move the market by 2,000 points in either direction. 3. The vulture strategy. If you have cash, you are a vulture today. You are waiting for the weak hands to capitulate. Do not buy the morning open. Let the Bestway Cement numbers drop at 2:30 p.m. Let the IMF headlines filter through the news wires.
If the government signals that the IMF is satisfied without draconian new taxes, we will see the mother of all short squeezes. Until then, keep your cash holstered and your finger on the trigger. I am Malik. Trade the reality, not the panic. Disclaimer: Stock Sense is an educational platform. I am an analyst, not a financial advisor. The market is in extreme volatility. Trade at your own risk.